Welcome to Bloomberg ETF IQ. I'm Scarlett Fu, in for Matt Miller.
And I'm Katie Greifeld. And Scarlett, it's really happening.
It's really happening. This is the first of 2 episodes of ETF IQ this week.
There's so much going on, we couldn't do it in 30 minutes alone. So on that note, let's get right to the biggest stories right now in the more than $10 trillion global ETF industry. The Cointucky Derby is finally coming to the finish line. This week, we are potentially getting approval of U.S. spot Bitcoin ETFs.
So it is the perfect time to speak to the godfather of ETFs, Mr. Reggie Browne. He'll be joining us in just a moment.
Plus, we'll speak with Matt Hougan from Bitwise, whose spot Bitcoin ETF has the lowest proposed fee in the race. And before we get there, though, Eric Balchunas from Bloomberg Intelligence, he's here with us now looking at the flows. Eric, take it away.
Katie, Scarlett, thank you. It is hard to concentrate on anything else, but I'll try. We're going to look at the flows here. This is obviously all ETFs before we get to the Bitcoin stuff. Look, this is pretty promising. I know the market started out a little shaky, but the flows are pretty good. IVV, VU, the Qs, all up in there. You got DIA, that's the Dow. And then RSP is interesting. This one we're watching this year because it's a way to go into the market without such big exposure to the Magnificent Seven because it equal weights all the stocks. So we're looking at small cap and equal weight, seeing if they get some catch up this year. Let's look at the outflows. You're going to see a bomb of money out of SPY. Now, I'm not too worried about this because this is tax loss harvesting money. A lot of people go into SPY for tax reasons in December. That's why the flows were 30 to 40 billion, and they leave in January. So I'm expecting about 20, 30 billion out of SPY. HYG, TLT, expect more money out of that. I think that trade was a big trade last year. People probably going to try to find returns somewhere else. And GLD outflows. Speaking of GLT and its new competition, we're going to have a bunch of Bitcoin ETFs on the market, likely, very soon. And they just came out this morning with all their fees, right? So we are an inch from the finish line. And when you put your fees, you're real close to launching. So interesting. Bitwise, a lot of waivers. 0% fee up until the first 6 months, then 24 basis points. Same thing with ARK, but 25. Invesco, same thing, 59. But the big one, the whopper this morning, is BlackRock. The waiver is not interesting to me. It's this. This is the base fee, 30 bips. I thought it'd be 45 to 50, to be honest. So this is undercutting. It's almost like they foresaw playing the long game and just trying to make it up when they get assets in. Everybody has to rally around this fee now, and so you can see these fees all near it. There is others on this list here, little pricier. Franklin near there. Fidelity, that's 39. They're still within. Wisdom Tree, Valkyrie, and Grayscale, way above that. That'll be interesting to see what their plan is to battle a 30 basis point BlackRock. So this morning, right, couple hours, it was like 2 years of fee war got condensed into, I don't know, 90 minutes.
Yeah, this day definitely started at about 6 a.m. when these started rolling in. And needless to say, for the past couple of months, people have only been talking about one thing in this industry.
Spot Bitcoin ETF.
Bitcoin ETF.
We have, I think, somewhere between 8 and a dozen filings in front of this agency with regard to exchange-traded products around Bitcoin.
If all goes as we believe it should be going, we'll have a number of issuers come out of the gates at the same time. So you will have a number of options for investors.
I think in January, the approval of the spot ETFs is going to be a major catalyst that's going to definitely drive a demand shock.
The arrival of GBTC as a uplisted spot Bitcoin ETF, as well as spot Bitcoin ETFs more generally, is actually the beginning of an opportunity for the advised wealth market in the United States.
Joining our conversation now is Reggie Browne. He is head of ETF trading over at GTS, known as the godfather of ETFs to many. And Reggie, should we have champagne on set? Is this really happening?
It's really happening finally. Look, it took 10 years to get here. I think most inflection points for innovation takes about that time, that long time period. And so I think that by the end of the week, we'll have a Bitcoin ETF trading in the marketplace based on the underlying spot, but trading with futures. And I think it's interesting to see what's going to happen.
What are you watching for on day one?
Well, first, I was interested in the fees, exactly the structure. But I'm really interested in the cash curate mechanism. Mm-hmm. Most ETFs are in kind, where the underlying asset is put inside the trust by the APs. Here, we have to go through a cash method. And my concern is the cost and the methodology around it. Now, what's interesting is that the Bitcoin futures, they do trade a premium. So while we're going to celebrate today, I think the morning after will come with all the details. And I think some of these ETFs will trade at a premium. And then as investors start to understand the nuances here, I think that's where we'll start to filtering out the nuance and the small points.
Let's talk about that premium. So the premium will be the price versus the NAV, that difference in percentage points. Typical ETF like SPY might be 2 basis points here or there. It's almost right on it. The Vietnam ETF could be 1%, right? So the more exotic the underlying, the higher the premium discount. Where do you expect these to land? And also in the spreads, which is the bid-ask spread, do you see these, as they get volume, coming down to 1 or 2 basis points?
I think the spreads are going to be really competitive and tight. Look, the market maker community is resilient, is prepared to offer a lot of liquidity for this structure and resiliency around it. So the spread width is not the concern. I think it's going to be the premium above NAV, because look, U.S. broker-dealers can't trade Bitcoin Cash inside their broker-dealer. Some can, most can't. And so you're going to have to hedge yourself with futures or trading at a premium, and then take that off. And I think that there's a lot of complexity there. So what I think, potentially, you could see 8% above fair value.
8%?
It'll be some crazy number.
That's a lot.
It's a big number, but let's see play out, right? Because look, you can't necessarily drive the arbitrage out. You can't trade Bitcoin directly. You'd be offshore to do it. And you're trading futures in real time. Futures are trading at a premium to spot. I think that there's an equation there to be played out, understood.
All right, Eric's heart rate just spiked. I felt it. I'm sure you guys did too. Let's talk a little bit more, though, about how this evolves. So, okay, right now it's cash creation redemption. We know that if you take a look at the SEC meeting minutes, those memos that maybe some of the issuers were pushing for in-kind here, do you think that the industry will evolve to that point where in-kind is possible?
Absolutely. I think that this was really just to get the ball moving, get everyone comfortable. And then the regulatory structure to trade cash inside of U.S. broker-dealers is not really here yet. So I think this was a win for the issuers, and the commission said, look, let's get something on the board here, and here we are. So look, that 8% number I said to you, I think that it's not going to trade at parity. It's going to be some premium to fair value. What that ultimately lands in, who knows? But the in-kind, I think, it'll come after climbing a couple of mountains.
Let's talk about the overarching impact of these spot Bitcoin ETFs when they are approved. What does it mean for something like Coinbase, the crypto exchange?
Well, I think not only Coinbase, but there's EDX, there's several exchanges out there. More trading goes on regulated exchanges for transparency. I think this consolidates winners and losers pretty quickly, in my opinion.
Is Coinbase necessarily a loser?
I think they're a winner right now.
We'll see about that. The volume, some of the numbers around how much the exchanges make versus the volume they do, and if you compare that to the ETF market, it's just night and day. The ETF industry is just, I call it a terradome. Everyone is used to living on scraps. The intermediaries in the crypto world, they are used to having the high life. So I do think there'll be some consolidation and tightening and cost pressures. That is all dependent on if the ETFs get volume. So we know they'll probably line up some seed capital and we'll see some money flow in. But what about organic volume? Do you see a lot of volume in these ETFs, and do you see it all rallying around one sort of winner that becomes like the liquidity king and the rest sort of like just try to catch up the best they can?
Well, look, the incumbent is Grayscale, right? They have 25 billion, whatever number is in there. They're the incumbent. It has to be, they're king of the mountain. And so I think it's for Grayscale's party to lose. Being priced at 150, I can see that walking over here. That's pretty hefty. The guys are smart. They've done a lot of great things to get to this point. Ultimately, it'll come down to efficiency, spreads, and who has the best operational experience performance-wise. So who knows? I think that the jury's out, but ultimately I think that 30 days out we'll probably see $2 or $3 billion of new money going to these structures. In the year, lots of bets going on in the marketplace, but I think we're probably somewhere between 10 and 20 billion of new money, new assets in these structures. But the global ETF spot, Bitcoin spot market, AUM, it's about 5 billion or so after 2 years. The first spot ETF came into Canada in 21. And so there is an empirical, you can look at that. Now, Canada is 1/10 the size of the world's largest ETF market, the United States. And there's a lot of advisors, a lot of tactical models want to use these ETFs. And so there's a lot of opportunity for growth here. But how big, 1 year out, I'm not quite sure. But, I'll be a seller at 40 billion.
A seller at 40 billion. That's a good place to leave it. Reggie, have to have you back soon. Really enjoyed it. That was Reggie Browne of GTS. Now coming up, it's the big day on Wednesday. Of course, the SEC coming on to that deadline on whether to action a spot Bitcoin ETF. We'll discuss the process behind it all next. This is ETF IQ on Bloomberg. Welcome back to Bloomberg ETF IQ. I'm Katie Greifeld. Time now for the ETF brief, where I walk you through the trends and the stories that caught my eye in the ETF industry. And we start with SPY. It is the biggest, it is the oldest ETF, and it is rapidly approaching $500 billion in assets. It's never been done before. It got very, very close at the end of 2023, taking a little bit of a dip right now, but we're going to be keeping an eye on that one. Also, too, on investment grade credit, you take a look at LQD. Of course, that is an iShares fund, taking in over $2 billion last week. That is the biggest weekly inflow since March 2020. So clearly demand for blue chip credit picking up again. But let's get back to what we really want to talk about, and that is that spot Bitcoin ETF race. Just to catch you up on the timeline, 19 B4s were filed on Friday. We got the amended S1s today. Those are the two things that the SEC has to decide on. And of course, we have that January 10th deadline this Wednesday for the ARC and 21 shares application. But Scarlett, as we know, the thinking is that we're going to see the SEC decide on all of them at once.
Yep, and they don't want to play kingmaker in any way, shape, or form. So, Katie, let's talk about this a little bit more with Bloomberg crypto regulation reporter Allison Versbrill, who joins us from Washington. Allison, as we mentioned, the deadline to approve or deny the ETFs is January 10th. If the SEC has any outstanding concerns at this 11th hour, what might they be?
So there are any matter of concerns that could come up. I mean, it would all have to be around investor protections and maybe, this how they create and redeem shares. But at this point, the indications that we're getting are that firms have been told to kind of meet those deadlines for getting in their filings, both the exchanges and the issuers. I think significant is some of, based on our own reporting, that some of the firms have kind of heard from SEC staff that they no longer have any additional feedback. So I think at this point, if there were any sort of 11th hour concerns, that might come as a surprise to folks. But if that does happen, that could be a situation where maybe the SEC comes in and says, can you withdraw that application, resubmit? We just realized there's this issue that we hadn't thought of before. So possibility, but not one that I think people are expecting based on the conversations that I'm having.
And as we're speaking here, you can see that Bitcoin actually reached $46,000 a coin. That is the highest level since April 2022. It's already been a long day. So clearly anticipation is building there. Ali, walk us through what's going to happen between now and Wednesday, because as you laid out, it's not quite done, but it's almost there. What are the last steps remaining now?
Yeah, so I think, I guess the main takeaway is we can't count it as, these are approved and they're good to go. I think people are reading the tea leaves and thinking we're moving in a positive direction. But based on the reporting that we've done, we're expecting that the SEC commissioners are going to vote later this week, specifically on the filings that exchanges had to submit. And then the way the process would work is if the commission holds a vote, approves, we should be seeing those issuer filings, the S1s, potentially being declared effective pretty soon after. It could happen concurrently. That's not something that we know for sure at this point. But if both of those are approved, then, these could be going live as soon as the next business day. So could be a big week.
Yeah, it could be a big week, and we'll be all over it, as will you. Right now, we have, 12 filings, is it, or is it 13? I've been reading different numbers here.
I mean, I've been reading different numbers as well. At this point, the last that I had seen was actually more on 11, but I think there are other ones that maybe I'm not counting at this point. But definitely, we're looking at about a dozen filings. I will note that doesn't necessarily mean that every product is going to get approved at the same time. It's possible that They say that certain applications aren't complete or need to make adjustments. But what I will say is that the SEC did get a lot of flack back when it was approving the Bitcoin futures ETFs on sort of selecting one firm to go first and then several days later having the next approval. They faced a lot of backlash over first mover advantage. So it's something that, I know is on the agency's mind as it looks at this issue, and something that we should be keeping an eye on. But definitely the industry is expecting that there will be kind of, if these are approved, that they will come in sort of a batch.
All right, Allison, really appreciate your joining us. Allison Verspel, Bloomberg reporter based in Washington, who covers, of course, the SEC. Now, still ahead, we speak with Matt Hougan of Bitwise, one of those horses in the spot Bitcoin ETF race next. This is ETF IQ on Bloomberg. This is Bloomberg ETF IQ. I'm Scarlett Fu, along with Katie Greifeld.
Eric Balchunas from Bloomberg Intelligence back with us for today's drill down, but we're doing things a little bit differently, Eric.
We are. We're blowing up the system, Katie, because it's worth it. But also, none of these spot ETFs are actually on the market, so we can't pull up a DES page yet. So what we're going to show you here is all the ones ranked by fees. This is important, right? Advisors love low fees, and we are out to a fast, I would call it brutal start. I always say the ETF industry is hell for issuers, but heaven for investors. If you look at Bitwise, they're now the low watermark here at 24 basis points. Then you've got 25 from ARK, and then Invesco's 59 with their waiver. That's why they're here. Now, iShares at 30 to me is probably, again, the most interesting shot fired this morning. I think everybody now has to sort of get within the orbit of that 30 basis points because advisors really like that brand name of BlackRock. So if you're anywhere too far away, it will be a tougher sell. So with Bitwise as the cheapest and some of these other ones, it is definitely going to bode well because we know, Katie, Scarlett, that advisors love cheap stuff.
Hell for issuers, heaven for investors. I'm going to remember that one. I like it a lot. But joining us now to talk about his spot Bitcoin ETF application is Matt Hougan. He is CIO of Bitwise Asset Management. 24 basis points. That is your proposed fee. Walk us through how you arrived at that number.
Well, first, thanks for having me on. Obviously, I can't speak about the ETF beyond what's in the filing, but if you zoom out, what Eric said is exactly right. We know that ETF investors care deeply about fees. The less they pay, the more they keep. At Bitwise, we've been structuring investment products in crypto for more than 7 years. So as we approach this sort of ETF era of crypto, it makes sense that the products are fine-tuned for that market. I think investors are going to be happy once we get to that ETF era. It's a win for investors. And the issuers, we can work with it. It's definitely a functional price point. So we're excited about it.
So what's your take on why Grayscale has cut its fees down to 1.5%, but is still leagues above what everyone else is doing?
It's an interesting situation. I probably shouldn't speak about a competitive product, but it will be interesting to see how this market develops over time and what investors do. There's certainly analogs in the history of the ETF market of having significant differences in expenses between competing ETFs. And I think the right ETF will find the right investor.
Yeah, and I agree with you. I think there'll be a strong middle class, as I like to put it, even an upper middle class. That said, there's probably only room for one liquidity king. But that doesn't mean everybody else can't get theirs. Real quick, though, we get the fees. That's important. Now, as you know, there's also things like spreads and premium discount. We just had Reggie on. I'm not sure if you heard what he said, but he said the premium could be upwards of 8%. That seems high to me, but that could conceivably be looked at as a cost. What's your take on that?
Well, I think investors need to look at the total cost of any ETF. You and I have talked about that for years, Eric. That's the expense ratio plus the trading fee. We'll have to see where these come out to the market. I will say that at Bitwise, again, we've been running investment products for more than 7 years. The Bitcoin market is a liquid market. There are institutional players in that market. I think if you look deeply in the filings, you can see how people intend to structure it. I have confidence that these will be liquid markets, but it will be interesting to see where they come out, both from a spreads and a premium discount perspective. We'll have to see whenever the launch happens.
And so liquidity is earned. You know, that's not something that we can look at in the same way that we're looking at the fees right now and saying, oh, this one is going to be necessarily the most liquid. And with that in mind, I mean, aside from fees, how else do you plan to compete, given that, as we've been talking about for 6 months, there's 11 horses in this race?
Yeah, it's a great question. You know, we've been competing in this crypto market against big players and small players for a number of years. I think the clients that work with Bitwise value having a specialist asset manager in the space, one who's there to answer their questions as news develops in the crypto market. If you're an advisor and a big news development breaks in crypto, you want to have a partner that you can call. I'll point out that in ETF land, it's not always the big players that win. If you look in specialist areas of the market like commodities, U.S. commodity funds beat out Deutsche Bank to be the largest player in that space. In MLPs, Alerian dominated that space despite being a small player from Texas. Oftentimes, investors look for specialist expertise in specialist areas of the market. There's no more specialist area of the market than crypto. So that's been a calling card for Bitwise for the past 7 years, and we hope to extend that into the future as well.
I love seeing you show off your ETF analyst chops there, AMLP. I like it. So as an ETF analyst, you're a rare breed as somebody who's in the crypto world now. Knowing how the ETF industry works, we had Reggie on, we asked him this. As these issuers come out with these pretty low-cost ETFs already, and we know the fee war will just intensify, how much disruption will this cause intermediaries in the crypto world, and are they underrating this?
Oh, I think it's going to cause price compression in that space, but history would suggest that they will make it up and then some in scale. I'll throw another very old ETF example to you, Eric. Back when GLD launched, people worried about the gold ETF competing for the market for gold bars and coins. But actually, even as the ETF grew to $100 billion in assets, the volume of gold bar and coin purchases 5x'd over the 5 years following the ETF launch. So I think ETFs bring this asset class into the mainstream, and the scale that that brings can make up for the fee compression. Yes, we'll see fee compression. That'll be great for investors, but we're going to have a lot more investors coming into this market. And so I think that will lift the boats generally.
All right, Matt, great to speak with you. Really appreciate your time. That is Matt Hougan of Bitwise Asset Management. We wanted to highlight our coverage this week of potential approval. Bloomberg Crypto tomorrow at 1 p.m. New York time, and a double dose of ETF IQ this Wednesday. Kathy Wood will be with us. This is Bloomberg.